Hi traders, this is Dr. Barry Burns with Top Dog Trading. Received an email recently that contained a couple of questions that I know some other traders are asking as well, so it seemed like a good time to go ahead and address these questions. The first one is whether there's any website that I use for, as this reader or as this writer says, daily forecasts to give me an additional edge. If so, could I pass along any recommendation? And this particular person's watching the Dow and the NASDAQ futures, so we'll address the issue with regard to those markets. And the second one was, once a person gets their account built up and they're becoming successful, what type of trading do I recommend? Do I change strategies or markets? Do I trade any different markets, etc.? And then he says, thanks again for your help. Your trading strategy is working great for me. Thank you for that. So, two questions there. Let's answer them one at a time. In fact, I'm going to take them backwards, so we'll answer the second one first. The answer is yes. I do encourage people, those are, if you're trading the futures markets, by the way, those are the two markets I would recommend you start with, so good job, you're starting with good ones. The Dow and the NQ E-minis, the reason I like them for beginning traders, and you may even want to just stay with these forever, that's perfectly fine, but they're only $5 per tick. So that means that each incremental movement, the smallest movement possible, is $5. You know, with stocks, they can move a penny at a time. But with futures, they're leveraged, and so they don't move in penny increments. It varies what the increment is from futures to future market. And with these particular two, they move in $5 increments. So the smallest movement up or down would be a $5 movement. Now you get to the S&P E-mini, and the smallest movement is $12.50. You get to some other markets like the Russell, $10. You trade, the large-sized indexes. It's going to be more. Bonds, it's going to be more, over $30. And so what I recommend in general is that you begin by trading inexpensive markets. And that's purely because when you start trading, most likely you will not make money. And we just want to keep your losses small. As you're going through your learning curve, we want to keep your losses small. So we want you dealing with as little money as possible. But as this writer says, once you start building your account up, you've got a history of success and it's consistent and you're feeling good about that, then I do encourage you to move to the more expensive markets. The Russell's good. Obviously the S&P E-mini is good. Bonds, various types of currencies, etc. And the reason for moving up to the more expensive markets is that your commissions stay the same. But, well, in general, commissions actually can change a little bit. But you can make more money. You can also lose more money, of course, but again, once you've got a consistent record of success, trading the higher priced markets allows you to have commissions be a smaller part of your overall financial equation. And of course, commissions are pure expense. So we want the ratio of your commissions to your earnings to be as favorable as possible. Okay, let me give you a real simple example of what I'm talking about here, although the math is pretty obvious, but just to point it out and provide perfect clarity. So if you're trading the Dow E-mini, the symbol is YM. It's again $5 per tick, and once again the tick is the smallest increment of movement that the market can make. So if it goes up 10 ticks, in this case $10. So if it goes from, well, Dow's not at 10,000 right now, but let's say it goes from 10,000 to 10,010. All right, so you would actually make a $50 profit. Okay, got to add a 0 here, don't we? There we go. Now we got some good math going on. Okay, so $5 per tick goes up 10 ticks, $50 profit. But you've got to pay commissions. Let's say that your commissions are $5 round turn. This is just on one contract, obviously. Multiply it times however many contracts you are trading. And therefore your net profit after commissions would be $45. So your commissions are 10% of your profit. That's of your gross profit. Okay, so just remember that. Commissions, 10% of your gross profit in this particular case. Now, again, let's take the Russell 2000 minis. They trade on ICE now. And let's say you're going to trade that. Well, that symbol now is TF. And that's a more expensive contract, so it's going to cost you double. But also it moves twice as much. It moves, well, for each movement, for each tick, the value of that movement is $10 instead of just $5. So again, assuming it goes up the same amount, 10 ticks, obviously now your profit is $100. Okay, commissions still $5. Therefore, your net profit now is $95. Well, what does that do? Your commissions, and this is the key right here, your commission's $5, your gross profit's $100, so therefore your commissions are now only 5% of your profit. So this is what I mean when I say after you're getting a successful track record in trading at the lower price contracts such as the NQ or the Dow, then it may be wise to go to the higher priced contracts so that commissions become a smaller percentage of your profits.